Hey guys, welcome to Individual Investor. I wanted to do this video for a long time. I will show you guys the approach that I follow for my own investment portfolio, which, as you will see, it combines a few different strategies which are generally recommended to individual investors. Let's take a look. Alright, first off, let's look at my rules or my principles. The first one is the rebalancing. So every 6 months, I check my portfolio and the allocation of the asset classes, and if the delta is 5% or more, I rebalance the portfolio. I do it 2 times a year, every 6 months. That's easy for me. My birthday is in June, so in my birthday month, in June, I check the allocation of my asset classes in my portfolio, and then I do it again in December. However, there's no hard rule for this. You can do it 3 times a year, 4 times a year, doesn't matter, as long as you stay consistent with your rebalancing. Secondly, the asset classes. I keep it simple, only stocks, cash, and crypto. And in this case, I'm following Warren Buffett, who has publicly said many times that he doesn't like investing in bonds. In fact, if you look at the data over the last 50 to 80 years, the stocks over the long term, stocks always have had better returns than bonds. So if you read books like The Intelligent Investor, you will see that they recommend either a 50-50 or 75-25 allocation or split between stocks and bonds. But in my case, I don't like investing in bonds, and because I'm investing for the long term, 30 to 40 years, I'm okay with stocks. And finally, the last principle, I keep the investment portfolio separate from my emergency fund and my pension. So more specifically, if we look at this picture, what we're referring to in this video is exactly the investment portfolio in the middle. I also keep an emergency fund. The rule of thumb there is that you should keep an emergency fund of at least 6 months of living expenses in case of an emergency. And in my case, I keep the pension separate. I know that a lot of people actually combine their portfolio and their pension, or they manage their pension or retirement funds as a portfolio itself. That's fine, but in my case, what we are reviewing in this video is actually my investment portfolio, which is separate from the pension. Okay, so in terms of the allocation of the assets, I follow a 10-20-70 split, 10% crypto, 20% cash, and 70% stocks. Now, the cash is not all just sitting in a bank account. I allocate this cash in safe investment vehicles that generate some low interest, like money market funds or T-bills that are highly liquid. So I consider those as part of the cash bucket. And if we look more specifically at the split of the assets, on the stocks side, 50% of the stocks is actually index funds, more specifically broad U.S. market index funds and the S&P 500, and then 20% I call that individual stocks, but they're not technically. I mean, yes, I invest in individual stocks, but I invest in those individual stocks as part of a strategy or as part of a portfolio in their own. So, for example, as you have seen in my other videos, I do a magic formula investing and also rule 1 investing. So I keep those as little portfolios, if you will. And in terms of the crypto, I invest only in Bitcoin and Ethereum, and I'm long Bitcoin and Ethereum. And I know that a lot of people don't like investing in crypto. It's very risky, and I agree with that. However, for me, I'm comfortable allocating 10% of my money in Bitcoin and Ethereum for the long term. Some people allocate only 5% of their portfolio, some people do only 1%, and some people don't even invest in crypto, and that's absolutely fine. But this is what I do. Moving on, let me explain a little bit the balancing or the rebalancing in more detail. So on the top, I have one example where the delta, that is the allocation of the assets, exceeds a 5% difference. When that happens, at the time that I check every 6 months, then I rebalance the portfolio. So on the top, we have an example where the stocks allocation increased to 76% and the cash dropped to 14%. In that case, I have a couple of options. So I can sell stock from the portfolio and then just keep the cash and increase the cash allocation to 20% and reduce the stocks to 70, or I can just increase my cash position by allocating part of my income into the portfolio. So I don't sell stock, but I take part of my income and then I allocate it into the cash position of my portfolio, and that also rebalances the portfolio. The other scenario on the bottom, in this case we have the crypto position dropped to 7%, the cash position increased to 27%, and the stocks dropped to 66%. So in that case, what I would do is I buy stock and crypto to rebalance the portfolio. So you might have different combinations of this every 6 months, but the end goal, the takeaway here is that I will either buy or sell or redistribute my money to make sure that I'm as close as possible to my ideal split, which is 10% crypto, 20% cash, and 70% stocks. And with that, if you enjoyed this video, I would appreciate if you can hit the like button and subscribe to my channel to stay up to date with my content. And if you have any comments, or if you would like to share your own approach to managing your own portfolio, I would love to see it in the comments. Thanks again, take care, and I'll see you in my next video.